Thanks Agam, and thanks Dilip for joining us in such a short notice. This is something that has been in the works for almost 1.5 years, except that the rating agencies have been kind of reluctant. They didn't want to take that big step. Now, very clearly, we have a scenario that is emerging. What is the scenario that is emerging? 2-3 parts to this. One, very clearly, that there is going to be continuity in policy. And the bigger one is the RBI bonanza in the form of dividend. That 1 lakh crore is going to make a lot of difference to the fiscal scenario, to the fiscal picture, which is why let me quickly go back and read from the printout. They are saying, this is very important, viewers should take note. S&P is saying we may raise the ratings if India's fiscal deficits narrows meaningfully such that the net change in general government debt falls below 7% of GDP on a structural basis. The protracted rise in public investment in infrastructure will lift economic growth, dynamism that combined with fiscal adjustment could alleviate India's weak public finance. So we are on the course for a rating upgrade. It's a matter of time. Whether it will happen after 1 year or 2 years is something which we need to wait and watch. I think this budget is going to be crucial. They will take into account the 2 lakh crore benefit that they have got from the RBI, of which roughly 1 lakh crore is the bonanza or the surplus. Now, based on this, let me ask this question to Dilip. Dilip, do you think that the RBI's bonanza will make a lot of difference and take us towards a rating upgrade?
The rating agency has taken note of this dole out of dividend by RBI to the government and its positive impact on the fiscal health of the economy. So I would say that yes, the trajectory is right. Now the question that, as I just said some time back, is that in the past so many years, in the past 3 to 4 years, the government has been the biggest spender. So the infrastructure spending has been largely done by the government, and it had a good multiplier impact on the economy, because of which we are seeing good GDP growth. Now, if the fiscal deficit has to come down, the government capex will come down. So will it have an impact on the GDP growth? No, if the private capex also steps in a reasonably very nice way. So that is the catch-22 and a challenging situation for our country. And hopefully the private capex... Hello?
Yeah, we can hear you. Please go ahead.
So I think the private capex has to meaningfully step up to compensate the conscious attempt made by the government to lower its expenditure. So as government lowers its expenditure on the infra, whether the private sector will do it, time alone will say, but I think the direction is right. Now, whether it takes 1 year, 1.5 years, 2 years, we do not know. But I think definitely the direction is right. And how soon the commensurate inflow of private capex happens, I think that will help the rating agencies decide much quicker on the rating upgrade.
I think that's a very important, valid point. Private capex has to come in. The government has been spending. Let me also welcome Dheeraj Nim. Dheeraj Nim is economist at ANZ Research. Dheeraj, thanks for joining us. What's your observation of S&P upgrading the outlook for India?
Thank you for having me. Look, I think it's a positive step and, of course, an important step towards an eventual rating upgrade. Whenever that happens, nobody wants to speculate that as yet. But I think it's in totality an acknowledgement of India's improving fiscal position. And as you mentioned, of course, a lot of it has to do with the RBI transfers to the government being much more than expected. But let's not forget the underlying fiscal trends have always been quite encouraging in the last few years. The quality of spending has improved, which I believe has a significant multiplier effect on growth from a cyclical perspective, also from a structural point of view. It's improving countries' infrastructure for a country which is very capital deficit to begin with. And at the same time, revenues have been surprising on the upside, and of course, there is a near consensus that a lot is happening on the revenue front in terms of compliance and, the widening of the tax net and things like that. So all of these fiscal trends combined, I think it's a very welcome development. It's an acknowledgement of India's improving fiscal position. At the same time, when the central bank can contain inflationary pressures by remaining hawkish for so much longer because growth is holding up so well. So that's my broader takeaway from this outlook update.
Okay. While we wait for more reactions, there is also some more positive news on the screen, as you could see. The IMD is predicting the arrival of the monsoon in the next 24 hours. And remember, this is yet another positive news. We have been having positive news is now raining. We first had RBI bonanza, then we had the IMD predicting above average monsoon, and now we have S&P outlook, S&P upgrading our outlook. We are also joined by Anubhuti Sahai, Head of South Asia Economics Research at Standard Chartered Bank. Anubhuti, thanks for joining us. What's your reaction? We are on the way to a rating upgrade after this?
So to start with, it's definitely a very positive development, and it basically reflects confidence first on the whole set of reforms which the government has been pursuing in the last decade, and that really makes the medium-term story look extremely positive. Second, quality of fiscal consolidation, which has improved significantly over the last few years. And third, the structural change on the external front, which has primarily come on doubling of services exports. So it's endorsing all these positive changes which have happened over the past few years, and extremely positive because it just comes ahead of election outcomes. So that's the surprising part, that we are getting this upgrade in outlook just ahead of elections, which shows, that there is conviction that policy continuity would remain irrespective of election outcomes. On your question about when do we expect a rating upgrade, that's extremely difficult to say at this particular point in time. But S&P has mentioned, the conditions attached to it, along with a time frame of 24 months. So if we see further improvement in fiscal deficit, then probably that can lead to a rating upgrade, but it's still too early because the government has a fiscal deficit target of 4.5% or lower by FY26. How much better we can do on that will become extremely crucial going forward.